Han here, and we've got podcast and the social media recording now. All right, so welcome, folks. All right, so tonight it's a little different. Um, I want to talk about my Substack and transferring over from where I'm at to Substack. So I'm gonna pull up my Substack here now. If this is too boring, let me know. We can do a free reign on anything you want to talk about. So right now, um, just to give you a brief history on the platforms I use WordPress. I just moved over to Substack.com about 2, 3 weeks ago. The Substack's much bigger now than my traditional WordPress blogs and stuff. Everything outside of this is on WordPress. So eventually, everything I'm doing will be moved over um, to Substack. So what I'm referring to is if you go to my Quant Labs Academy stuff, let me just show you here. Let me just log in here, and then I'll show you exactly what we're talking about. Now, I don't know how long this presentation will be. Just loading up my back end here. All right. So what I'm referring to is, sorry about all the delay here. Okay, so here's my backend that maybe you guys may know or not know. Yeah, here. Oh, okay. So what's going on here is, oh man, my site's really slow today. That's another problem as well. Okay, here we go. So in here, I've got, like, I'm not doing too good today, am I? Um, I'll show you the last set of posts I did this morning. Um, Basically, what's happened is I've been using what I'm about to show you for the last 10 years. So for me to do this move over is a big deal, okay, into Substack. I'm doing Substack because it's more modern than the standard WordPress. So this is my back end stuff now. So all this, what I'm about to show you, will be moved to Substack. So as an example here, I've got my stock picks. There's a variety of different ways I put up content for people that are by paying customers. So just as an example, this is ETFs and stock picks. So these would be today's stock picks for today. And then there's the ETFs as well, which I do. This information is going to move over to Substack. Okay. The other one I have as well. So this would be good for any broker you're on. Currently, I use Interactive Brokers, so these are the type of things I trade on Interactive Brokers. So these are the stocks. This stock right here, this NHC, just as an inside tip, this stock, which is National Healthcare Corporation, appears to be a really good winner. And these are the ETFs. So these are either ultra short, or ultra bear treasury, or the SRS and REC are bearish short real estate. So that's what's moving in the market according to what I'm tracking. So that's for Interactive Brokers. So what I'm going to show you on this one is from Awanda. Okay, so this is another data set. So in here, you'll see there's a lot of Forex pairs in here. And again, this will get moved over to Substack as well. So I do this every day. This stuff gets posted every day. So you're going to get Forex pairs, which are looking pretty good to put money into. Here, I segregate out the maybes, and this could be because either they're not moving in a trend that I like to see, but they have potential to actually break out and become like a really good Forex pair or CFD to buy into. So let me know if you guys got any questions at all so far. Um, So basically, what I've got here are the pairs. So let's say the markets. I have not been eyeing the markets. So let me just see what the markets are doing today or how they did. So I just use Yahoo because it's a quick snapshot. So you can see here Nasdaq was doing really good. Probably one of the Magnificent Seven did pretty good there. The S&P 500 obviously 0.69 up, and then the Dow was negative. Meanwhile, we have oil up, gold clearly up, and then of course we look at the crypto, which is your Bitcoin, which is down, as well as the CMC Alternative Crypto 200, and then Nikkei and the FTSE as well. So because the market's been down pretty good for the last 2 weeks, they've been down 2.3%. Everything's gone defensive. So basically, what's happening is, just as an example, the way I'm seeing things, everything you're going to be making money in forex pairs in currencies. That's the place to go. So, for an example, now just so you know, today I was with a bunch of guys that manage about, I don't know, 200 to 250 million Canadian at a bank. And Yeah, I was with them for 4.5 hours today. So I was trying to pick their heads on where they see the markets going. Right now, they're very different on how they manage their portfolios. What they do is they try to keep a target of about stay in the equities about 60% of most of their clients' uh, portfolios, and then they have what they call alternatives. So alternatives is not what we would think is maybe like a crypto or something like that. It's just a different way of a different type of strategy that they're using, and they're up pretty good, but they totally ignored the Magnificent Seven, um, just due to most people's risk profiles on their portfolio. So when you look at, let's say, this pair right here, which is a very defensive pair, the USD Japanese yen. If you look at the 6 month, you can see it's moving up quite nicely. So when the stock markets go down or stay flat, I do believe that this currency pair will continue to move up. Okay, so you'll start to see these currency pairs get a nice return as a defense play. Another good one is this USD Canadian as well, which is really an oil play. There goes my my crazy chihuahua. Hang on here. I'm sorry to do that. This dog is amazing. Gets into really bad moods because he's not sitting on my lap. Anyways, so as another good trade right now are these kind of runs that you want to see. So that started in July, and you can see that that's moving up pretty good. Very predictable moves. These are ones we want to see. Another one is just as an example, we'll stay in the CFD world. U.S. oil is a good one as well. So no, let's say BCO. Uh, no, I'll have to pull up my trading view. I believe there's about three platforms I work with, which is nuts. Okay, so we're now going to show the CFDs for the oil as soon as it enables me. Come on. Yeah, so if I show you BCO, which is Brent crude oil, this is another pair doing pretty good. Um, or I'll do WTI CO. This is the Western Texas crude, Oanda. So this is a CFD as well. So these are the kind of moves I like to see. I've been saying this for a couple of weeks now. You're not getting this in the markets. So you can see here for July, really nice run up from 68 to $84, dips back, and then it's struggling to get some strength back in the market. A lot of this trade comes 50% from China. So when I go back to the pair, as I showed you, the USD Canada, you'll know. that trade that pair is driven by oil because Canada's a big time uh, com- um, commodity is oil, and our currencies uh, entwined with that. So you can see the similarities between that and Brent crude. So here, uh, it's the same for WTI as well as very similar is the BCO CFD as well. So my point is, those are the sort of things I'm wanting to see as well. Anybody got any questions so far? Who's gonna jump in live if you want? I know it's a different format than TradingView. That's one other big reason why I'm on Jitsi, because when I do streaming on TradingView, I'm very limited what I can say. Anything marketing related for my services, I can't say on TradingView. I get booted off and then get banned for 30 days. So I have to be very careful there. So that's why I'm here on Jitsi. So
Question.
go ahead, man.
So, you have a portfolio that you structured to generate alpha for the rest of the year. What would that look like?
Okay, yeah, that's a good question. Okay, so with that post that I showed you earlier, let me pull that up. So as I said, I do daily calls. So these ones are the ones I'd probably go with for now. There's a couple of stocks in here. As I said, this stock here I just discovered on Friday, NHC. This looks like a good winner. And remember, a lot like these guys that I talked to, they're staying in the stock market, but they're not changing their portfolios. And these portfolios have been in play for about 2, 3, maybe 5 years, and they're not changing them. So I was trying to get them to see what they think of a company like this, NHC, National Healthcare Corporation, right? So this is just one example of a stock that looks pretty good to buy into. You can see how that big parabolic move here, and it's still rallying even with that big run up. So these are the kind of stocks you want to kind of have in your portfolio. Now, is this a long term one? Probably not. But to be specific, what would I put into a long term uh, portfolio? Going back to this post here, all of these are all these right here are the ultra short treasury under 6 months. And these guys agree with that's the place to be, but they're mandated where they have compliance where they would put capital in a equivalent bond plays, but they're not going to be in ETFs. So they agree that these three would be good ones for long term. These three here are REK. Let me pull up Yahoo just to give you an idea. So this is a ETF that is a short real estate ProShare. So I don't know how long this has been in play myself, but I'll pull up the 1 month chart. Actually, it's looking pretty good since July. 6 month, you can see that started. So this could be another sector to be considered for a long-term portfolio. So SRS is another short bear real estate as well. So those two you can look at. So what I'm saying here, to build a portfolio is going to involve your treasury, short-term bearish real estate. Let me show you the NHC. I've shown you this one. I think this will come back. This is a big steep parabolic move, so this will probably drop back. But one way to confirm that is to do a that's a 4 year pull up a daily. Um, yeah, so this started around when did this start? July. So this could be a long-term play. I can't say. It's really tough to say in the stock market because it's pretty volatile right now. But that was an interesting one. Healthcare is pretty good. There were some interesting ones for stocks for the dirty industry, like steel, oil, as decent ones. But for sure, Treasury I think is going to look pretty good long term. Let me go back to my other window here to answer. So where I was going with long term, it's going to be currencies. If the markets do long term trend down, where the money's going to be made is in currencies. Okay, I've highlighted this in the last number of weeks. So we're going to have, if oil comes back, a really good one will be USD Canada as a currency pair. Another one that for sure, if the markets get really bad, will be USD Japanese yen. Those guys agreed. Another
Well,
one. Go ahead. Go ahead.
you have to pick one asset class you hold from now till the end of the year with the lowest amount of risk, with the greatest upside. What would you choose?
For four, I'd
One.
choose, like, if the markets got really bad, I would choose forex currencies
Which pair would you hold? So
for
you hold the
sure.
pair.
The strongest right now is USD Japanese yen. It depends upon your risk profile. If you're a wealthy person, definitely a USD Japanese yen, and you can see this USD Japanese yen. Uh, this one long term. Let me pull up. I don't know, 1 year. You can see it's nothing but steady moving up. Right. That's since April, since June. Japanese government's trying to do yield control. Look what happens to the yen. It still climbs. I mean, actually, it still weakens. This is a very long term play. This has been like this for a very long time. If I showed you a 5 year, you can see, yeah, it'll have its moment where the Bank of Japan will try to influence that trade or to put to put capital back into the Japanese economy. But look what happens. The Japanese continues to weaken.
So it's a situation of buy the dip, right? In the USD yen. If you have
Well,
a good dip, you can basically buy dips, accumulate it.
yeah, yeah. It just came out of a dip, but I still think that this trend will continue as a long term play for a buy and hold strategy. USD Japanese yen is consistent. If you want to really have the, like, you're really willing to take a risk, this one's your best one. Is since 2021 euro Turkish lira 891 right there, and it's at 29. So it's gone up 3 times, right? And again, you can see there's no volatility in there at all. And it's because when you hold the Turkish lira or the rand, which is supposed to be highly volatile, they're supposed to be highly volatile, but you're not seeing that here. Why? Because the markets and gold with US dollars is way more volatile. So this right here is your ultimate. If you want to make ultimate long term capital, that's what you want to hold, is the euro Turkish lira, bar none. Now,
All right.
if you want to play gold, let me show you this one. So let's say you want to play gold. Gold in Turkish lira is the best currency to hold. Gold is in the Turkish lira again. You can see here at 1350, and now it's at 5160. So gold is doing what it's supposed to do, right? But it's only doing what it's supposed to do in a weak currency like the Turkish lira. So it's gone up over 3 times since when? November 2021. So it's done pretty good. Nobody talks about that. Um, so if I compare that to the sort of return with the gold and US dollar, you don't get any performance whatsoever right there. Okay, it's up 57%, but I'd rather take 613% return than a 57% return, right? And
Yeah.
and and that's because the banking system kind of suppresses the value of gold of what it should be. But holding it in lira, that makes a huge difference. So you're asking me what's the number one asset pair or whatever you want to call it? These two is the lira, euro lira, and the golden lira as well. Now another pair that's doing really good, a lot of people aren't hearing about, is the USD and ruble. Okay, because the ruble is probably going to start crashing.
I think it has already.
Well, it's in the beginning stages. This is just like in the last week, right? So let me just pull it up. Now you can see that its performance already from 1661 to 39. So you're right. And this trade right here is when the early invasion of Ukraine, right? But you can see it's starting to climb now on its own. So that's a really good trade, long term most likely. And the other one is the USD Argentina peso. I don't know the symbol for it, but Argentine peso is another definite predictable trade because it's a crisis, right? So those are your best ones to pick from for sure.
Okay, thank you.
No problem. And then when you look at oil, oil probably perform, but the problem with oil is Iran is still part of OPEC. And apparently I just learned this today that half of the orders for oil goes into Japan, or sorry, it goes to China. And with China, uh, majority of their oil orders are coming from Iran. It's not coming from Saudi. It's not coming from Russia. So that's going to have an effect as well on oil. Um, and yeah, so I do think the number one asset class to have is definitely currencies or forex.
Cool.
Does that answer your question,
Yes, sir.
Mr. S? So like I said, I'm moving over to Substack. So all my premium, call it premium content will be hosted on Substack. So if you're not on my Substack, subscribe to it. And if you want to subscribe, the easiest way is just to go to the blog, quantlabs.net blog. And I just put this in late today or late last week. And it's right there. You'll find it under the top here, and you can join on the Substack account. And then once you're in there, I bump you up into the paid, and then you'll be able to get all my data on Substack that I'll be posting, but it's for paying subscribers, if that makes sense. Any of you guys, any other questions you want to cover, or any other technology? The other
You want
thing,
to view Bitcoin real quick?
my outlook on it.
Yeah.
Um, well, I just put up an idea on it yesterday. Okay, so this probably because you know that Bitcoin's been dropping, right?
Yes.
So when you look at Bitcoin right here, I got a Fibonacci. Um, right now it's below the 618. So its new support right now has been set at just under 25,000. I believe that right there, 24,792. I personally think that Bitcoin will probably continue to drop. There's a lot of reasons from a fundamental point of view, and these guys again, these uh, money managers said the same thing, or they agree with what my theory is that um, with Bitcoin, it's traditionally the way to fight the system where people put money to hide out from the fiat world. Um, and because with the SEC, with the monkeying going on, where, as an example, Binance was getting sued, Coinbase was getting sued. And then once those were announced the following week, what were the next set of announcements? ETF announcements for BlackRock, Fidelity, all the big players were now going to get their ETFs for Bitcoin. And on top of that, Grayscale was put theirs approval request like probably a year ago. And now all of a sudden, why are BlackRock and Fidelity getting approvals over and faster ahead of Grayscale? So what this tells you is that SEC, the whole American government, are monkeying around with potential of Bitcoin to move. Why? Because they're afraid of Bitcoin and crypto world overtaking the fiat, and people will start moving money into crypto and Bitcoin. So what do? They'll try to find ways to suppress the performance of Bitcoin. And how do I know this?
Having spotting gas in Bitcoin, that's going to ultimately suppress the price because want more ways of shorting it, etc.
No, this chart will show it to you exactly what you're looking for. So when you look at that announcement, I don't know the exact time on the announcement, but when that announcement came out, and you look at let's say um, year to date, you can see what's happened is that there was a big move back in June for Bitcoin, and as soon as BlackRock announced, look what happens. It goes flat. And why did that happen? Because now it's gone range bound. There's no performance in Bitcoin. And that's fine and good for them because that means nobody's going to have an interest in Bitcoin. No one's going to have an interest in investing into Bitcoin or any crypto. So as a result, what's the other alternative? The fiat world. And that's the benefit of BlackRock. So that's why I do believe BlackRock had an incentive to announce an ETF because it keeps people in the fiat world instead of putting money back into the crypto world. And that's one of the incentives.
But if it's a Bitcoin ETF, doesn't the ETF have to invest in Bitcoin then?
Yeah, it does. But remember, in the peak of Bitcoin back in the uh, time when Bitcoin was reaching, let me get back to my. Um, so if you look at the peak of Bitcoin back in, was it 2021 when it's at 60, 70,000, the market cap of crypto was over $2 trillion. So now, because people have lost interest in Bitcoin, it's now down to 500 billion. So it's lost 75% of its market cap. And that's fine and good for,
So where's all the money going? If they lost interest in Bitcoin, what are they buying? They're selling Bitcoin. What are
yeah,
they buying?
okay, fair, that's a fair question. This post right here, um, what this process does is following the hot capital flow. So these currency pairs you're seeing, that's where the money's going. It's going into currencies because that's where the performance is.
Foreign currency.
Yeah, 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 and specifically in places like euro, the Turkish lira, because it's a predictable uh, uh, investment long term. And not only that, but when you look at Ken Griffin of Citadel, Warren Buffett announced they're reopening a new office in Japan, and that was around the same time when the yen was starting to really get strong. That tells you that that's where the money's going. It's going into Japan. So they expect returns will be made in Japan over the next set of years because it's predictable and it's low volatility. Does that make sense?
Yep.
That's where the primary of the money's going, I think. And a lot of it's going into yen because you have to also remember when it comes to the national debt of the US or the Western economies and their debts like going through the roof, those economies, specifically like the US, are default, sorry, debt based. So their economies are built and driven by debt. Whereas in Japan, they have a very high GDP to debt to GDP ratio. It's like over 200. How are they able to get away with it? The difference between countries like China and Japan, they have an economy of savers. So they're not really impacted by the negative moves of what the Fed does. Whereas because consumers in Western markets are like heavily indebted. Whereas in Japan, China, they have huge savings rates, so they're not impacted by it. That's the big difference between Japan and the US because people go, well, how and why does US get away with a high GDP debt? And the answer is because their economy are savers, not debt holders. Whereas that's what's happened in the US. So I think when you get money managers like Ken Griffin and Buffett, they see that. And then that's why one of the big primary moves, they move into Japan. So if the US goes into some form of meltdown, which it probably will, um, they, it's going to be a heavy toll on the US economy. I mean, just look at what, was it was it Moody's or Fitch? They put out a,
Moody still has its triple.
no, that's not what I'm saying. I think it was
Something.
Moody's. They forewarned last week that they're going to start reevaluating the large banks in the states, Bank of America,
Okay.
and I think it was J.P. Morgan. They're putting them on credit watch because they're concerned about their debt holdings. They're extended. So if those banks get downgraded, you might as well just say, well, we'll downgrade the American capitalistic or downgrade the credit system of the U.S. It's the same effect. So if you have the largest banks in the world, B of A and J.P. Morgan, getting downgraded, that's a reflection overall on the financial system of the U.S. So that will really take a toll on the U.S. stock market. And that was just announced last week. And they just downgraded how many banks? Smaller banks 2 weeks ago. So now they're reevaluating a lot of the big banks, and that's not just that. But I don't know if you heard about Michael Burry, the big short he put on last week, 1.3 billion on both QQQ and Nasdaq, and that's one of the big reasons why the
Why
market.
not SPY and SPX? Why the Nasdaq?
Well, the Nasdaq's the one that's got the Magnificent Seven. I mean, right here, when you look at
She feels the Nasdaq is a long way to go down. It's more volatile.
no, it'll go down faster. Look when you have the Nasdaq up 1.56 versus the Dow 30 was down 0.1%. So that's how skewed Nasdaq is because it was some good news item, probably Nvidia as a new their next quarterly reports on Wednesday. Because of that or some good news item coming out of Nvidia, yeah, it moves the Nasdaq because they're that big and it skews the market. The stat that those guys showed me today, the Magnificent Seven, they're only seven stocks, but they're able to.
Term trade is thing is, we're in third year of an election cycle. After a midterm year, the market generally goes up, but it went up a lot, and there's headwinds, inflation, higher interest rates. We had a good second quarter as far as the market went. Not so much earnings, but as far as the market going up. So he's betting that historically, September is not good for stocks, and especially not good after stocks have gone up a lot in the first half of the year. So I think his bet is that September will be bad. It'll be down. So probably he'll be looking to take profits end of September, early October.
He's not that kind of trader. When he puts a trade on, it's for long term, and when he does a short in this case, it's for a long that set of those shorts will be put on for a very long time. That he did a big massive short in '08 before the market crashed. So this short
It's early. It's very early.
that
So
that's what I'm saying on this short.
this time, if he's early, he's going to be dead. He's not. He can't be early. It's shorting stock market. The stock market is perfect. So he can't be early on this, right?
No, I think the markets are gonna crash.
I think his timing is probably spot on. They could go sideways or they could crash.
Well, look at the performance of S&P over the last month. Look, you got last month down 3.4%
Yeah.
and 5 day 2%. So he's probably thinking the market's cooled off in July, and they're
He's looking for a 10% total drawdown in the market. I think that's what he's
I
going
think
for.
it'll be a
So
lot. I think it'll be at least 30%.
30%, wow.
Yeah.
Between 10 and 30% is in the ballpark. 30% will bring us to the lows of October of last
Yeah, but you got to factor in what happened in March, how the market got crushed, and now you're getting
year.
the rating agencies forewarning that they're going to potentially put downgrades on JPM and EOA. And if they do that, then that's a big signal saying that the financial system in the US, not little banks, big banks are at risk.
Yeah.
So
So you're saying, okay, so the recent high was last month, right? The high was in the SPY 45944,
yeah,
right? Basically 460.
yeah.
So we basically have to take 30% or 460. So that's going to be quite a traumatic move. That's going to be quite traumatic.
Well, that's why people like you here. I can show you this. I'll show you my sector for my sector thingamajiggy for
That's 138 points, SPY points, not
yeah. Well,
SPX points, SPY points. Holy crap!
this will summarize it pretty good. If you look at the sectors now, remember I'm able to watch 64 sectors.
It's about 323, 320, 322, 323 is the bottom, according to the 30% drawdown.
Yeah, hang on here. So if you look at the returns for these sectors, okay, I think I've shown you this before.
It's pretty much where the 100 EMA is
So if you look at this, is
on the
45
monthly.
these are 45 sectors, and only 6 sectors are profitable for the month of August. So when you see only 5 sectors out of 45, and there's another 20 in there, that tells you that the markets are beyond cooling off. They're going negative. And that's also including crypto, which is usually supposed to be indirect relationship between that and the markets themselves. And in here, I'm sure I could find gold, and that's down too. So when you get those kind of sector plays not profitable, then yeah, you got a problem. You guys still out there?
Yeah. Wow. It's hard to believe. 322 is absolutely. I don't know how. 30%. That is, that's like a worst case.
Well, I think it'll be worse. I think they said it could be as much as 50% in a very short period of time.
50% from the all-time high or 50% from this high, from where we are
Yeah, from
now.
the year to date high.
Uh-huh.
I
Wow.
mean, look at that crash right there in March, right? So you're going from 336 down to 231. That's already one third. So that was just three little banks that you never heard of. But now you got Credit Watch, and look at the trend right now. Um, that if either BOA or JPM get a downgrade, you can expect beyond 30. I think it'll be probably 50 because that's putting the market in a question. The financial system of the U.S. will be questioned, and then at that time, that's when then Bitcoin will just boom.
The SPY PE ratio is 80, so it'd go to 40. So, yeah, that it could happen. A 40 ratio.
It could happen in the next 2 months. It's just waiting for a catalyst of some kind. I think the catalyst will be probably Moody's will come back and say, "Yeah, we're going to downgrade B of A, for example," and that's what Michael Burry's seeing is exactly what I just showed you. All those sectors are just negative for the month of August.
So did you buy any puts?
No, I don't. I don't do options, right?
Did you buy any inverse ETFs?
Well, I'm probably looking at those treasures as I showed you, ultra short.
Okay.
But I probably would load up um, on the currencies, the USD, Japanese yen. Um, the better one to load up on to get a massive return is gold. Gold will spike. So
Well, if the market crashes, the yen will crash with the market because the dollar will go up, right? People will be buying
that's
dollars.
true. Yeah, that's very true. Yeah, but again, also depends upon what the BRICS, because the BRICS are meeting tomorrow or on Wednesday. So that outcome is going to have a factor as well. You know.
Yeah, this is a fascinating discussion to be continued. I have to run, Brian.
Okay, no
Thanks a
problem.
lot.
Just so you know, the one factor to watch is the gold silver ratio,
Yeah,
and that
that's a quantitative study. When I got into quantitative trading, that was the first study I did, gold to silver ratio.
yeah, that's a very
Yeah,
reliable, and also watch the price of copper as well, because that's going to be used for an early lead indicator, and you can see that it's been crashing, not crashing, but coming down. Once you start to see copper go up, then that's when it's safe to say the
yeah,
economy should start to improve.
we know that copper can be a leading indicator in many cases. So
Well, especially for China. and there's that relationship between Australia and copper and China.
I'm looking at copper. I'm also looking at uranium ETFs. They're a
E-
little bit high now, but I'm
yeah,
looking for them to
uranium.
go down. I'm looking for them to go down so I could buy some. There's some that have a nice dividend. That might be a good play.
Yeah,
Yeah.
uranium's done pretty good. But right now the number one is short term, ultra short treasury.
Yeah, but I just read in the Wall Street Journal today that bulls are coming in and they're dip buying. They're starting to buy out this treasury gotten cheap. They're
Well, yeah,
long with
right
it.
here.
So I don't know. They're going to start buying it back.
But what's going to happen is you're going to start to see it to crash. That's the problem with these ultra short. So I think we're too late in the trade, right?
For the ultra short treasury, definitely. Yeah. Yeah.
Well, it's not. I don't speculate on it. It's just that's the data that I'm seeing, right?
Yeah. No, I wouldn't go short treasuries at all. Actually, I'm long treasury.
Well, what you mean long mean the duration of 30-year
I like
duration? T-bill, okay.
treasuries. Treasuries. That's like cash, right?
Yeah, yeah. Well, you're already getting some decent return on them.
Even with 5%.
Yeah, there you go. Exactly.
Really? I want to look into it. PIL. It's the Bloomberg T-bill ETF. It pays over 5% now.
Wow.
Risk free.
Yeah.
Right?
Well, hold on. This is what I didn't like about this. Let me show you the pattern here. So if I pull up the 1 day, uh, let me see here. 1 day. It's these patterns I don't like.
Uh,
I don't like those patterns.
what do you mean? It's a T-bill. That's the pattern that it have. It's monthly, right? You get a monthly dividend. When the
Oh,
dividend,
okay, okay.
then it drops, right?
Right, 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 right.
You could just continue to hold it and get the dividend, or you could cash out before. Many times it makes sense to hold it, get the dividend, and let it crash. It's gonna reset. It's not gonna crash, it's gonna reset. Basically, it just resets. That's
Yeah,
all.
yeah. Well,
It's
yeah,
it's
I
a
like
fixed,
that's the lack of understanding on my part on that one. That's good to
yeah,
know.
yeah. It doesn't trade like a normal stock or ETF. It's a T-bill,
Right, okay.
right? That's you got to think about it as a T-bill. It's an investment. You can
Yeah,
probably even use it as collateral if you're trading or something like that.
yeah,
It's
yeah,
basically like
yeah,
cash.
yeah,
So yeah, but if you have money aside, like in a retirement fund that's collecting low interest, no interest, it makes sense to think about this. You're gonna get 5% risk free.
yeah. What's the latest you've heard about the latest variant? This is Vinny's question.
I don't know anything about that. I saw that. No, I don't know anything about. You know anything about a variant?
Yeah, apparently there's a new variant. I don't remember the name of it.
There's a new flesh-eating virus out there on the East Coast that's killing people. They say stay away from going in the ocean. Don't eat seafood, raw seafood. Stay away from seawater. It's a problem. It's a big
Wow.
problem right now. Yeah, like 8 people have died already. It's not bad. So, but no, I
Well,
haven't heard about the virus.
well, there was
Maybe Vinny can give us additional information about the strain. I don't know anything about that. So,
well, they're saying I heard this morning on Bloomberg they said that the one I can't remember the name of it, but it's called Eris, I think called, and they said it has over 30 different mutations to it. And that's what they're worried about is the number of mutations on it. And they also said that the current vaccinations won't help you at all. So it's like you've now taken all these vaccinations and boosters or whatever for no reason with these new
yeah,
variants coming.
stock. Yeah, stock. The mass companies that make
Yeah, it's
everything else.
true.
Yeah, we gotta. Oh wow, really? I
Yeah.
should cancel my gym membership. I have to cancel my gym membership. I
Um,
can.
so here we go. So there's variants EG5, I think that was the one, FL 1.51 and BA 2.86. I was sent by somebody on here from North.
Stuff.
I don't know if you guys know Chris Sky, but apparently north 2 hours north of me.
Thank you, Vinny.
Yeah, yeah. But the the one hospital is already prepping for it with these partitions and whatnot. So it's not like it's not known. Will it mass into something? I don't know. or it could be, I don't want to say this will get put up on YouTube, so it might affect my channel. But yeah, I don't know. It's a big unknown. I mean, I have my theories on it, but that's a different conversation. I have to post that on Rumble.
It says that they seem to work, that the COVID vaccine seems to work on the variant.
The new ones?
Well, that's what it's saying here in an
Oh,
article.
there's a guy this morning saying
Yahoo.
otherwise.
It's a Yahoo article.
Oh, forget our Yahoo. I only use Yahoo
Well,
for charts.
you can read it. You can decide if you want to listen to it. Listen, I really got to
Yeah, I know
run
you gotta
now.
go.
Talk to you later. All right.
Okay,
Bye
thanks,
bye.
man. Bye.
Thanks. Good chat, man.
No, no problem. Any of you guys got any other questions at all? Um, because I could go on, but tonight I just want to mention the Substack is I'm going to move a lot of stuff over to it. For those that may watch this video, let me pull that up. Substack. So I'll be quantlabs.substack.com. I purposely put a free section in there here so you can get a sample of what kind of stuff I'm talking about for the analysis, um, and my methodology and how the whole workflow comes together. One other thing in there, you'll find I'm on Motorwave on that. That's currently where I'm at, but I'm planning to move a good chunk of my trading and order, all that stuff to over to TradingView. I just find TradingViews really good on the strategy stuff and along with the order execution as well. So that's another big thing as well. So everybody that comes in, I'll be able to invite them into all those scripts that I have available in TradingView, and then you can use those to apply your own strategies into your own into your own uh, TradingView charts. And if you want to do live trading, just get one of the supported brokers or exchanges. So they have, like I said, interactive brokers. They've got Oanda for Forex. They've got Coinbase. Oh no, they have Binance for crypto, or Bitstamp, or Gemini is the other one that they have. It's a fairly big one for live trading on TradingView and crypto. So those are the options right now. I'm sure they'll add more as time passes. Any guys got any other questions at all? Um, any topics you guys want me to cover over the next couple of weeks? Just type them up in the chat. No, yes, no. Okay. If there's nothing else, what I'll do is I'll I'll be probably doing another couple of presentations as I get closer to more specific of what I'm going to do with TradingView and the strategies there, and be able to just showcase what I'm doing in Substack as well. It's going to get pretty exciting because I think between Substack and TradingView, it's these are excellent platforms to be on, as opposed to, as I said, the WordPress, all that, because they're just, I don't know, they can easily get manipulated by the social media, Facebook and Google and all them, YouTube as well. So those dedicated platforms, like I said, TradingView and Substack are really good. They got literally now millions of people on both. TradingView, I think, is the largest investing platform on the planet. What I see that when you look at the audience sizes of Bloomberg and CNBC, Substack, or sorry, TradingView is still bigger combined than those two media outlets and websites or whatever. Any other questions at all? So what I'll do is I'll do it go once, twice, three times, and if not, just let me know and I'll call it a day. And for you, Vinny, I'll reach out to you on Twitter so we can set up the session tonight. So I'll do it going once, going twice. Don't see anything in the chat there. Okay, going three times. So we're done. I'll post this on YouTube. And thanks for being part of this. And I'll set up, hopefully, going back to normal on TradingView. But as I said, I'm very restricted what I could say on TradingView. So, for example, if I want to say something about Substack, can't do it because TradingView would look at that as competition. I'm breaking the terms of service on my live streams. Therefore, then I get most likely banned for 30 days, which obviously I don't want to have happen. So my backup's always going to be something like Jitsi because Jitsi's free and it's fairly decent to work with and reliable and blah, blah, blah. That's about it, I guess. Anything else? No problem, guys. And thanks for watching. I'll talk to you maybe in the next few days. Make sure you guys are on my email as well. That's how I announce everything. Okay. Have a good night. Over and out. Later.